The following is a presentation of TFNN. Live at TFNN, the Power Trading Hour, with your host, David White. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, David White.
And welcome all to another exciting edition of the Power Trading Hour with me, your humble, lovable, squeezably soft host, who's trying to catch up because I lost power about 4 minutes ago, and I'm trying to get a bunch of things that died back up and running. So just give me a little breathing room, and I think we'll be okay. But I have a little power glitch here, and I've got a whole bunch of UPSs underneath this giant desk. I've got the aircraft carrier desk here with 4 monitors and a scanner, laser printer, all my audio equipment for doing the show, my video equipment, stereo monitors. Anyway, a lot of power going on there. So give me just a minute here. I'm trying to remember what I need to do now. I think I'm all set, other than maybe closing 1 or 2 of these things here so I can figure out what's going on. Let's save that. And I need to open up my email, so give me just a second here. Anyway, you can give me a call at 877-927-6648. That's 877-927-6648. Now let me move this around there and get to the meat of the matter, which is, of course, the S&P cash, like we normally like to start off with. We're off just a little less than 12 points at 2023.60 as the last tick, 2.51 billion shares on the New York Consolidated Tape. So we will keep an eye on that. Not a lot of movement in some other things that I find it kind of surprising with all the action here. Off $2 on the gold contract. And of course, probably nothing more important right now than how the dollar index is moving. And we're off 32 cents at 88.34. Looks like there's some kind of support right around this 88.30 level. I am in the camp that we are probably in some level of deflation, and that level is probably going to go up to about 92 on the dollar index. And I suspect, especially when we see the kind of movement we have seen in crude, which is, let me get my last $58.16. I'm expecting kind of a big move next week, and I think that's going to be in crude. I think we've had kind of the washout into the weekend, and I would not be surprised to see this get incredibly whippy. And right now I'm looking for, but not playing, I'm playing indirectly in the daily newsletter, a move probably back up to that $64, $65 level. And we'll have to see how that plays out. But I have a feeling that we're probably going to get some kind of whipsaw next week going into expiration. Just seems to me like so many people are on one side of this trade right now, and that is the short side. We've had probably all the margin calls you could hope for if you are short crude. And it is a crash, so they're not uncommon. But my guess is that what we've seen here in the last, 24 hours seems to be overdone. Doesn't mean it can't go even farther, but my guess is that we're going to have a wicked whipsaw before it goes lower. And yes, crude could go lower. I've heard some people talk about some numbers, and there's an old theory, and I've talked to a lot of people that have been commodity traders, and that is that, of course, commodities go to some unobtainable level, unsustainable level, and then come right back down to the cost of production. That cost of production was about $48. So we're about $10 over that for the aggregate world. But that $48 number was 5-6 years ago, before a lot of inflation. So we've got to be probably fairly close to the world aggregate cost of producing oil. And at that point, somebody's going to turn off the spigot And I think that there's going to be some good side plays to that without having to actually play crude itself. And we're already in that in the daily newsletter. And it's doing well, actually. So kind of a weird day out here for me. And that is I'm generally one of the most bearish people long-term that you will find. I just don't think that we're going to see this market blow up before the end of the year. Although there are some very interesting positions out there. We added one in the Tech Insider that I'm out into April puts on. And I think we're starting pretty much right now. And I'll probably be adding all the way through the end of the year as we get the opportunity. But I think a lot of these things are going to be long-term moves. There are going to be, at least in the Tech Insider, I look for two things. I look for a fundamental, and I look for a technical component to each one for a longer-term trade. Some of the ones that we did this year were Cree, basically on an issue with Plessy, basically an English company, coming out with a way of using silicon instead of sapphire for its base. We've seen that. I think we got involved in it around $65. It's trading around $30 now. We didn't catch all of that, but I caught the major movement in that. We got into some other ones, the same kind of thing. Just couldn't see how companies like Spotify, and actually the only one that's a retail stock, and that is Pandora. We were short that. I think we were short that about $38, $39. Had a good ride down on it. Probably could have stayed a lot longer. Unfortunately, it's been one of these markets where there are stocks that we've made money on, but pretty soon everybody and their dog's all over it if it does go down, and you end up with 40 and 50% short interest. I was looking this week before Cons reported, and I think the short interest rate, or the short interest on that particular stock, which is kind of a cross between Aaron's Rents and Best Buy, was something like 45%. I pretty much knew the thing was headed down, but do you really get into something like that that can take a leg or an arm off? Like my mom said, it's all fun and games until someone loses an eye. And we'll look at that. Anyway, you can give me a call at 877-927-6648, and I would certainly appreciate it. A little under the weather today, and I think I'll be on in the 4 o'clock hour, my gastrointestinal tract permitting with Tom, but I don't think I want to give him the Ebola today. So we'll see if I have to call in to stay away. I'm imagining old Tom would probably call me unclean and throw rocks at me if I got anywhere close to him. What's it with people that seem to go to work anyway when they can just give everybody else the same disease that they have? I always wondered about those people. There's the same people that only take off when they're not sick and say they're sick, but when they are sick, they show up and spread the misery. I hope you're not one of those people. Who are those people? Very interesting comment in the den, which I will not repeat. Anyway, nice movement out here, especially for what we have. I've been out in the morning buying some more out-of-the-money calls, and you may think I'm insane, but not a bad position to be on. We had a position in the daily newsletter, and we've doubled up on those. I actually had a position, doubled up on the position, and we're selling for 100% profit that second tranche that we added, and now I'm ready to sit on the rest of them through the rest of the week. But I think there's probably 3-4 more, probably $2-3 more bucks to go in that one. But I've been adding some other ones out there too, and they've been holding up rather well, actually. Also, like I said, side moves in energy, and I thought going into this week it would be impossible for me to find anything, but there have been little gifts all over. And the thing is that you have to be incredibly patient to let these things play out. A lot of times they only give you 5-10 minutes to be in and out of these positions, and we'll continue watching. But I think next week we're probably going to see, this is at least my upfront game plan, and that is we're going to see the issues fade with financing the government. That'll probably be a fait accompli for Monday. And after that, we're going to have a lot of people short and volume really starting to shrink. As I said as we started the show, about 2.51 billion shares start the day off. So it's going to be a better Friday for volume than most times. But it is going to be at least a decent day in the volume for a Friday, which is fairly rare. Now, again, we're probably going to start seeing volume really drop off starting Monday as we head into the holidays. A lot of people are going to try to get out of their short positions. If you are bearish on this market, I hear a lot of warnings about put your stops in if you're long. I think you probably, if you're dealing in a stock that has high short interest, I think you want to make sure that you've got close stops on the upside. If there's not much short interest in it, you probably don't need to worry about it too much. I imagine that a weak stock could go down, but I think we're looking at 5 or 6 in the daily newsletter, and I'm telling you, these things are not acting weak at all. And I think we've got a good opportunity again, like we had in September, to make some good wood. Probably not as good as in September, but probably still some decent money over the next week with these super high short stocks, and going into the end of the year with what's going to be light volume. As long as that volume remains light on these super highly shorted stocks, there is a good opportunity to see massive short squeezes. And I mean, $20 stocks running $3 over 2 hours, only to close back at the $20 that they started at. It's not uncommon, so you're going to have a fast finger to make some money on it, but there is, I think, a good opportunity to go and see some pretty decent intraday volatility across the next week. We're planning our flags, or a few of those flags, in the daily newsletter. Anyway, on this day in September 12th in 1914, the New York Stock Exchange reopens after closing in July amid jitters over the outbreak of World War I. By the end of 2015, a year from now, actually in 1915, a year from today in 1914, the stock market has risen nearly 82% as Western Europe supplies its war efforts with American-made goods and weapons. So generally, probably World War II a little less, but during World War I was highly bullish. I remember, of course, the day that the Gulf War started in, 91 or 92, the huge move it had. Always kind of nice to know how markets react to different events. And if you were there in 1914, you could have been teed up for an 82% move in the Dow over the next year. We'll be back in a minute. Give me a call, 877-927-6648.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Check out the new look of Tiger TV. Now you can see all hosts, charts, and computer screens live in high definition. Whether it's Tom O'Brien, John Logan, Steve Rose, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Thinkorswim, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV. Now, crystal clear in high definition, 24 hours a day, 7 days a week. If you haven't seen the new look of Tiger TV, then visit TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
And we're back. And it is an interesting day. Let's check in again as we've got some fast-moving markets. 2020 on the S&P cash, 2.6 billion shares. So we are getting a little bit of fear out here. I'm looking at some of these stocks, though, and kind of interesting to me that we've got the IBB that had a fairly decent range. But, boy, I tell you what, I know there are a lot of people that want to be short this, but it seems to me like it is very tough. I know that one of the bigger parts of the IBB came out with a kind of an emergency, what would you call it, an emergency upgrade to its ongoing, I'm having a mental blank now, quarterly dividend is what I wanted to think of. And it is interesting. And it was down and weaker a little bit more, and maybe it's topped out here. But my guess is this thing's going to go a little bit sideways before we see any kind of major break in it. Of course, on the IBB, what you have today is the first real tick down under the 3x3 displaced moving average. My guess is that you're going to get probably maybe in the last couple of weeks of the year, volume gets light. This thing's probably going to be playing back up around there. What you would think if you wanted to go short is that this would close back above this 3x3 displaced moving average. Let me In fact, let me zoom in on it here so you can see just a little bit better. But you basically had a fairly decent pattern that's called a double repo pattern that I like, and that is 10 to 15 days above a 3x3 displaced moving average. You can actually also do the traditional moving average, and it's about the same. I don't know why this thing comes back up here. Let's do 9 and 0 so you can see this. It's just about the same with 9 and 3. We're going to close a little bit above the 9-day moving average. The 3x3 works just a little bit better than this, but it's not off. Anyway, we would like to see some closes below this either 9-day moving average for a couple of days, pierce back above it, have no volume, maybe over the Christmas vacation, and the next time it closes back below it, pull the trigger on it. It's just hard for me to see. And again, if we go back and look just a little bit farther back, it is, you had basically a couple of days where this thing did close underneath it. In fact, let's go back to the displaced moving average. You had a few days where this thing did close below it, but if it closes back above it, you're out of it. So in case of the IBB, you would have had an opportunity to be short about 3 days. Next close back above it means that you're on the wrong side of this, and that's that's basically a way to make sure that you're not probably going to be wrong for very long in this one. As the old saying goes, from probably late 1890s, I think it's the first time I found it when doing some research. There's no sin to being wrong in the stock market. The only sin is staying wrong. And keeping an eye on this, especially on a kind of a ballistic move that this has had, is not probably a bad thing to do. But I think probably just a few too many people short the biotechs these days. I haven't looked at the short interest on the IBB, but I guess we'll do that in the coming break, and I'll bring back to you. In the meantime, wanted to look and see how some of the stocks had gone. Apple, actually, this is a good example of not doing the 3x3, but as long as you can stay under that, you could probably stay short. When we look back on this, this means that, basically we're looking for this thing to pierce the trend line to saying that the downside in Apple is over. Especially today, I just see this thing going after the December 9th low, 109.35. And of course, you had 60 million shares. You got 34 million shares today. Doesn't really make me all warm and fuzzy thinking that this thing's going to blow out the lows. My guess is that by next Friday, we're probably going to close out at about 115 on Apple. And if it all goes right, hopefully drifts up to 119.75 at the end of the year and gives us a nice good signal the first couple of days that maybe it's made a high. That's if you're bearish, I guess. If you're bullish, you see that volume actually comes in and everybody's happy. I did see today, especially in Apple, one of the reasons I'm bringing this up is that they did have a little article in the Asian semiconductor magazines out that they are going to only build maybe 2 or 3 million of these watches. So fairly light volume when you consider they try to sell 70 or 80 million iPhones of different size. Orders for 3 million doesn't sound like a rousing deal.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock in option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
And as we get back to the show, yesterday afternoon, Tom O'Brien and my friend Andy Heck, Tom O'Brien's my friend too, but I mean, Andy Heck, my new friend, I guess I could say, because we tend to IM each other a lot with some stuff that probably not safe for work, let's put it that way, but we both like the Aristocrats movie, but I don't know how many people else besides us do, but an interesting movie if you like that kind of humor. But anyway, it is one of the things that where they were talking about yesterday was the Mexican peso, and an interview that I saw too with one of the big cheeses of what can you say? Big cheeses of the Mexican government, where they had hedged all their crude out. And I saw this last night, and I thought it was very interesting. I guess the thought was that if they had hedged out all the earnings from crude, which is, other than drugs, probably the biggest income for Mexico, But what I saw was this Grupo Financial Mexico, BSMX, which is kind of an interesting stock out here. This thing hit a low of $10.02 back on February 12th. What can you say? 3.5 million shares. Now, we went through this in the last couple of days, but basically 2.2 million shares yesterday and 2.2, well, actually a little less than a million out here today. So, I dislike, or let me put it this way, I don't think that this thing's going to instantly have some kind of V bottom out here, but I would be watching this one fairly interestingly because it did hit this bottom and basically come in with lighter volume. If this thing could base out for 2, 4, 6 weeks, it may be one of the few stocks out here that looks half decent, especially if Mexico does fare better with having all that crude hedged into the next year. It may not matter. They may just say, hey, so Mexico does good for a year. The next year they're going to hell in a handbasket. But it does look fairly interesting out here, at least in this February 12th low of last year. Well, actually this year, right? Almost a year ago. And coming in with such light volume those last couple of days. Again, energy was far too much coming back down, and I think that may be because maybe a lot of people don't know that Mexico has hedged out all their crude earnings, and maybe that does put a light under a fire of some of these stocks where a lot of people haven't been looking. Mexican cheese finance minister. Andy's quickly typing things at me. But yeah, and even then, this may be an interesting play if crude does have like a $5 or $6 bounce, which I'm thinking this thing probably could, wherever it bottoms, probably going to bounce back up to 64, 65. I'm not watching it closely enough to say exactly where, but I'm thinking that this thing is about ready to rip some lips off of people that are probably staying a little bit too long to the party. Tell you what, if I was short crude or continued to be short crude, it shook me out a couple of times on the way down. But if I was still short crude, I would seriously think about being kind of a pig here if I hadn't started to cover some of these. So we'll see. Anyway, we've got some other stocks. They had a question in the den about what is it? Please, recent semi-mergers, RF Micro, Cypress, sharp trends, they're higher as a result. I guess the question is whether or not you could see that the consolidation in the semi business is really more bullish for the semi sector. And my thought is that right now it's just all about Apple. And it seems like there just isn't a lot of business outside of highly integrated chips that go in tablets and smartphones. And that is problematic. I do like the fact that Altera is up here at the high. Altera is always the canary in the coal mine for semis. To me, what I dislike is that it almost has tested this high on half the volume. That's, if we just go back to the September 19th high at $37.63. You had 9.2 million shares. The highest we could get within 0.5% of the high here was the December 11th high at 38.34, but 5.2 million shares. So to me, this certainly looks like it. The energy down to the energy up in this last leg, just a hair light. So to me, it would look more like a move in the upper trading ranges of Altera. Both Altera and Xilinx make very special chips. They're called programmable logic chips. And when I was in business in the company that went public that you may hear the ads, we used just a ton of these things, maybe 4 or 5 of them on some of our boards. So Altera, we were Altera's wonderful customer. They make these chips that if you made more than we did, like maybe if we sold, 5,000 of the product in a year, it would make sense to go out and build our own custom chip. But at this point, it worked out at the volumes that we were at to just use their programmable chips instead of build our own chips. At least that's what everybody kept telling me. I kept on saying that if we could cut our costs in half and make our own chips, that we could go to the next level. And no one liked that in our company. They like pretty safe bets. And I think that's what killed us in the end, being just a little bit too conservative, not willing to lay it on the line, as they say, and you don't pretty much have to be competitive. We still were. We were the biggest fish in a small pond. But Altera, Xilinx both make these programmable logic chips. I've programmed some of them myself. Very interesting technology. You can find YouTube videos on them. But basically, you can even reprogram some of these, depending on if you want to pay any more for those chips. Very nice if you make a mistake that you can pull the chips out, reprogram them, and not have to pay another $40 to throw the chip back in. But there's a premium, maybe $5 or $10 per chip. I think most of the chips we were using at the time were somewhere around $5 or $10. So the being able to drop the cost of a chip or all the chips on your board from maybe $40 to $5, $35 a board, you can make some pretty big cash. But so a lot of times you need 50 or 100,000 boards to make that transition from building custom ICs yourself as a company to actually using them. Anyway, Altera, Xilinx, both in this business. And to me, it just looks kind of like a lot of those consolidations out there are because it just doesn't make sense if you're not building your own chips. In fact, Altera now is having Intel build a great deal of their chips. Mostly because no one else can compete with them. And that's kind of the same thing with Cypress and these other companies, all consolidating. And that is that they don't build their own chips. They don't have the technology to. They outsource it to Global Foundries, which is a company that went private, and or Taiwan Semiconductor to build it. And we've seen Apple try that and not be successful over the last year. They've gone back to Samsung to build a great deal of their chips, and Intel. I think Intel makes a great deal of their processors for them now, just because Intel is probably 24 months ahead, and now probably going to be 30 months ahead with, we talked about AMD yesterday. There's just nobody out there that is pushing as hard as Intel is into the various businesses and shrinking the die size, some other stuff, and getting into a lot of other different stuff. So still pretty hot on Intel. Let's take a quick look at them. I just don't think it says a great deal about the business, let me put it that way, about those. Now, Intel, it is kind of broken above these highs. Everything above 3460 that had 130 million shares is pretty much a false breakout. I think this kind of tracks what we're looking at for Apple, the same kind of chart out here, and that we went to some fairly decent highs, mostly because people got too short or re-shorted the market after the September, October whiplash down to 1822 on the S&P cash. And that's added enough fuel to get these stocks probably a little higher than they should be going into the end of the year, and why we're seeing a little bit of the weakness. Let me check back in to see how the S&P is doing out here. 2017, so we're off 18 points on 2.76 billion shares. Wanted to look at some of the others out here. Again, this is kind of the pattern for these stocks that are breaking above previous highs on lighter volume. We brought this one up, Alkermes, ALKS. I'm going to have to look up one day on how this is actually pronounced. Maybe I ought to call them and see how they answer their phone. Anyway, over the last year, we really were watching how this thing broke the February 25th, 2014 high of $54.25. He had 1.4 million shares. Basically, as we got into that in November, he basically had 1.2 million shares. Was that on the day down? That was on a down day, actually, where it came off those highs on high volume, 1 million shares. But it's been very light. Actually, this spike high island reversal has taken us right back in. I'm kind of surprised that we're not back under the 54.25 level, as the S&P cash is coming back here a little bit. I've got a couple of stocks I just need to check on. Real quick, let me take a look. Okay. I'm still in the ball game, as they used to say. I like that. There were two commercials I really loved in the 80s. One was, you're still in the ball game with Apollo Hair Bond. And the other one was, came on late at night, was The Lone Ranger, financing innocent victims of bankruptcy and repossession. I probably saw both of those ads about 1 billion times. Anyway, I'm just looking out here. You know, I'm in a lot of these stocks with high short interest, and it's not like I'm going to retire today, but I'm thinking we've got some pretty good movement in most of them, or at least they're hanging out. And I'm in the money now in one of the bigger ones that I've had options on for a week or so. And like I said, already out half those for a double on the double up. But it is interesting. Okay, we'll see what else we have out here. Acor was another one I wanted to take a look at. Accordia Therapeutics. I'm not expecting the IBB to rip out here much higher, actually 309.59, but I could see it probably closing out at 310, 315 a week from today. I don't think that there's anything particularly outstanding in the pattern just yet that makes me think this thing's going to blow up. Accordia Therapeutics, ACOR is a symbol on this one. Kind of interesting, and kind of like most of the stocks out here in that are kind of the high flyers. Not a lot of volume coming into these previous highs. The March 19th high, $39.94. And that's 1 million shares. I just wanted to check and see if we had any other issues. 360,000 shares today. And that is not too bad. Energy was kind of light going up here. Again, I'm thinking a lot of these biotechs look like they could probably take a nice breather, but again, I think it's probably after the first of the year. If you were thinking about shorting these, I'd probably wait till the last day of the year, and maybe you get some people coming in and shorting and starting to sell these coming back after the first of the year. What else do we have? ACC, American Campus Communities. Kind of interesting. Of course, everybody talking a great deal about the loans, student loans that are coming out, and whether it's worth going to college anymore. And kind of seeing ACC, which is a company that basically is a big REIT for places to rent near campuses at colleges. And this had a high, it's up here with volume, but the volume is a little light. I'm looking at the July 22nd high of ACC, and it was $40.36, 1.2 million shares. We've kind of dallied with this up here, but let's go through the last 5 days of volume. 837, 966, 794, 631. Yesterday we had 825,000. So it's kind of tough to see that these stocks are actually going after these previous highs with at least even the same volume that we get in some of these other ones. But it is interesting. When we have time to do this now? I guess I'm going to start. I've liked, or at least the thought of getting long some of these uranium producers, and at least we're seeing the first signal on a test down. Now, again, energy was too hard down on CCJ for me to believe that this is going to be a V bottom out here, but not a bad looking chart out here when we look at the last few days for volume going up against the previous low. We'll talk about this more when we come back. You can always email me at path@tfnn.com. You can call me at 877-937-6648 or post a message in the den. I've got a question.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, oil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, Life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com.
TFNN has just announced a special sale for the Gold Report for a limited time only. To celebrate the 660th weekly issue of Tom O'Brien's Gold Report, that's more than 12 years, TFNN is having a special one-time sale. Right now, you can receive 60 weeks of the Gold Report. That's 14 months for only $600. We're offering Tom O'Brien's dynamic weekly newsletter at only $10 a week, half off the regular monthly price. By taking advantage of this special offer, you also get a signed copy of Tom O'Brien's best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, an $88 value. The Gold Report is published every Tuesday and provides subscribers with Tom O'Brien's expert commentary on the industry, as well as detailed information on a variety of mining equities. This offer is valid for current or new subscribers, but is only good through this week and ends this Sunday, December 21st. Lock in the low rate of only $10 a week for the Gold Report by placing your order at the front page of TFNN.com today. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Catch Tom O'Brien, professional trader and educator, founder of TFNN. Also, a special guest on CNBC. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
I had a question on what I thought about energy during the break via email, path@tfnn.com. Probably not enough time to get in on email, but maybe you can catch me Monday. I just saw a few of these stocks that look like they're kind of bottoming in this energy field, and that's what makes me think that we could have kind of a move in crude. We're 57.61, 62. Maybe we're getting the washout here going into the weekend. Basically gold still off $3, 1222.60, and you think if everybody was afraid, they'd be piling in gold a little more. In fact, I'd like to see them do that. Off 5-6 cents on silver, and platinum off $9, and copper not moving that much. Anyway, some of these stocks not looking all that bad out here. In fact, CCJ's finally broken through these October 16th lows at $15.55. He had 2.9 million shares. And, of course, last 3 days we had 2.5 million shares. Yesterday we had 1.6 million shares. Today, under a million shares right now. So not that bad. Energy did come down fairly strong, though. So you have to say that this is not probably going to be a V bottom, but probably one that moves a little sideways for you. Another reason that I think maybe we've got a bottom in some of these stocks, especially in the energy sector. Cliffs Natural Resources, of course, more iron and coal, that kind of stuff, doesn't look all that bad. It's out here breaking through its previous low on half the volume today. You got to look at this thing at $7 with 15 million shares on October 9th, into it today with 7.2 million shares. Is that right? Actually, yesterday, 7.2 million shares. Today, 3.7 million shares. So a lot of these stocks probably getting to the point where they're due for an oversold bounce, I suspect. And I suspect probably Monday or Tuesday we're going to see that. Kind of tough to get a lot of people probably excited about buying into a weekend, and especially, down 17 points on the S&P cash. 2018 as we speak, 2.85 billion shares. But again, not the kind of blowout volume. Probably you need, I'm thinking about into it right now, probably wanted to see 3.4 billion shares on the New York Consolidated Tape at this time to really think that we've got a blowout. I'm still thinking that we probably have a expiration somewhere around 2070, 2080, 2090 a week from today. That wouldn't be anything but a few days of high short squeezes in this market. And like I said, just be very careful if you are short this market. If you see a volume go light, there's an old saying, and I called it a chestnut. I guess maybe I'm the only one that knows what a chestnut is, but it's basically an old saying. And they always go, yeah, I had to dust off that old chestnut. But one of them, the chestnut I'm speaking of, that many people say is don't be short a quiet market. Now, I'm going to say the market down 17 points, probably not quiet. But we get a couple of very quiet days next week. You're probably going to want to watch it to see whether or not just the volume starts to fall and we see the shorts exit stage left, as they almost always do every Christmas. It's very tough to make money on the short side. And why I'm out here buying some out of the money, very inexpensive calls for next week. They may or may not pan out. If they don't, I lose a very tiny amount. If they do, I'm going to make a good-sized amount. Probably not as much as September, but I think doing okay. Anyway, we'll see you next week. Same bat channel, same bat time. I will be remotely talking to Tom about the technology so I don't impregnate him with my Ebola. And catch you at 4:20 for that segment. But I will be remote in my Ebola outbreak. Be back.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
You're watching Tiger TV.